first of all, today, I hope we get some pump on stream, okay? Because every time I pump, every time I stream, the price seems to dump and I sweat a little bit. But right now, I'm cooling, I'm chilling, and I think it's going to go in our way. So we're good. Anyways, today we're talking about market psychology, okay? Now, I don't know if you've seen anything on YouTube in regards to this topic, but this is different than trading psychology, okay? Market psychology is the psychology behind the market maker and what he's thinking. It's not about what you're thinking. Our jobs as traders is to exploit the market maker's moves. We want to trade alongside the market maker, which means we want to think like the market maker. We do not want to think like us. Retail loses. I say this many times. 95% of retail loses. Why would you learn from retail? So our job is to think like a market maker. That's the very first thing. For those who have no idea what I'm talking about already, that's okay. I've talked about market makers. I've talked about vector candles. I've talked about all that. We are going to be touching on that topic today. If you don't understand, just try to keep up, maybe keep some notes, and then go back. I'll link it in the description. Also for the YouTube people, I will link my old stream in the description. It's very important that you know what a market maker is and that you know what vector candles are. So I have 2 streams right now. They are lengthy, but I promise they're full of really good content in there. I will link it below, but you are going to need to know those basic concepts. So go back. If you're on YouTube, go back, watch those ones, and then come back here. Quick interruption, guys. The first number for the VIP Discord is a 0. The very first thing you guys need to understand when it comes to psychology. Humans have reacted to certain things the exact same way since the dawn of time. Humans are the exact same way, okay? That's why there is something called cycles. It's not because there's a set rule that Bitcoin needs to pump before the halving or whatever. It's because there's a cycle because human psychology repeats. When market maker pumps the price as he is right now, retail or us or humans will respond and react to this the exact same way every single time. And that is why if you look on literally any chart, any time frame, let's get rid of this. And actually, let's get away from my actual TA here. Let's go to a chart I don't use. Yeah, okay. That's why no matter what time frame you're on, you can see price action reacting the same, okay? Now, as I just mentioned, we've done a lot of streams. I've given you guys a lot of good, solid content, right? Today is going to be the why. Why do things happen the way that they happen? I've explained it, but now you're going to be able to see and understand in real time why, okay? So let's look at the example real quick of looking at different time frames. I mentioned in a previous stream, if you guys want to learn market cipher B, which is this indicator here on the bottom, for those who don't know, the best indicator out there. Sorry, how do I say your name? Guillermo. Do you mind just muting your mic, bro? Please. That's why I say, if you want to learn market cipher B, because it's very hard to do it in real time. It's a lot easier in hindsight. We can all agree on that. If you want to learn market cipher B and learn how it moves, hop on the 1 minute time frame because it reacts the same on the 1 minute as it does on the 1 hour, as it does on the 4 hour, as it does on the daily. Okay? It's all human psychology. It's all trading psychology, market psychology. Now we're going to talk about how the market maker thinks and how we can exploit these moves. Okay? The very first thing that you need to know, which I've said many times, the only thing that matters when you're trading is where the money is. I don't care about news. I don't care about the halving. I don't care about anything else. The only thing that's important is where the money is. It costs money, guys. It costs money to move the price from here to here. The market maker needs to pay money to move it. And it's a lot of money. It's not a small amount of money. Okay? So if market maker is going to move the price from here to here, then the market maker needs to realize a return in some fashion, in some way. Nothing is free in the world. We know this. The market is moved by money. And this whole concept, today's stream, is going to be about like our emotions, right? Money is an emotional thing. Everybody wants it. Everybody wants to be rich and powerful. It comes with emotion. I'm sure we can all agree that we've been in a position or at some point in your life where you've maybe gambled a little bit more than you should and you're kind of on edge. If you've ever been in a trade and you can't look away from the screen, I'm talking to you. And I also fall in this category. And even still today, knowing what I know, I sometimes fall to my emotions and I either FOMO trade, which you may have heard that term, or I over leverage, which you shouldn't do. But that's why it's important to try to be objective and practice the good risk management and whatever. So now we're going to talk about how this happens, okay? Now, this indicator is called Trader's Reality Main. It is one of two indicators that I use and one that I always advocate for. We have a lot of new people in the stream, so I don't expect you all to learn or to know what vector candles are. But for now, just know that they are liquidity, which means they're money. We know a market maker will move the price to where the money is. There's money here, all right? Now, the market maker, there's a lot of theories behind like who the market maker is. And to be honest, there's no real answer. I guess like people will have their own theories and whatever. For me, I believe that there are bigger institutions that act as market makers. It's not necessarily one person. However, they do work together and they do work across their different sessions, right? So New York will talk to Asia, who will talk to Sydney. You know, they talk across the board. So nobody knows really who the market maker is. It's kind of like Deal or No Deal. Wow, this is a really good analogy. I just thought of it on the spot. It's kind of like Deal or No Deal, where Howie is like talking to the banker. If you guys know the show, he's like talking to the banker to get the numbers or whatever. And you can see like the silhouette, but you don't know who he is or what he really does or whatever. But you know the banker's there. That's kind of what the market maker is. Now, for the ones that know that there's a market maker, we're aware of it. The market maker cannot hide his movements, cannot hide his moves, cannot hide his presence. So we don't know who he is, but we know he's here and we know when he's here. Okay? And we know that through vector candles. Now, if we know that the market moves based on emotion, right? How can the market maker exploit human emotion? Because at the end of the day, that's what's going to get him paid. There's two ways that market maker can make money. Either hit your liquidation, which is a forced, it depends on the direction, but either a forced buy or a forced sell. Or hit your stop loss, which, I mean, you set it, but it is a buy or loss. Same thing. How does market maker think? That's what we're talking about today. So let's hop on a higher term time frame. We're on Bitcoin. We're on the 1 hour. We're talking vectors. We're talking all kinds of things here. How does the market maker think? For those who are in my Discord, you know, pretty frequently, maybe a couple times a week, I call that was the low or that was the high. And I say it with certainty. I don't say it with any stutter over my text or whatever. And I'm backing it up now. I say what I say, not because I can anticipate what the market is doing, but because of the market psychology. We're going to use this wick here as the example. So if you guys are if you're watching it on YouTube and you want to go back and backtrack, whatever, we're going to use this example. This is 11 a.m. on July the 2nd, which was yesterday. Yeah, yesterday. Okay. And I'm pretty sure I called it this was the low. Why is it the low? Why? Why would it be the low? Well, let's take a look. I'm going to take you into the market maker's mind here. We already know that when there's a big candle, and it's a red candle, it's a vector candle. Okay? We already know that when price is dumping, market maker is not selling. Retail is selling within these candles. Right? For those, again, and I'm sorry to repeat it, but I have a lot of new people in the group this time. Vector candles are essentially, whenever it's a big red vector candle, market maker is buying, and retail is selling. Okay? That's essentially what it is in short. But go back and watch the videos. So when price is dumping a crazy amount, we know that market maker needs to realize a return on it. So what happened here? Wicks are considered liquidity. Okay? For those who don't know, wicks are liquidity. However, why did I know that this was going to be the low? And if you didn't have any TA, let's just say you didn't do any TA, you don't know the levels, whatever. How did I know? Let's say you came to the chart at this moment in time right here, a couple hours later. You could see the wick, and a lot of people could safely put their stop loss under the wick, sure. And this time it would have worked out. Sometimes it doesn't, but how did I know? Well, let's look at what happened prior to it. We had a lot of consolidation, right? A lot of nothing. We had a boring, boring time. Okay? But let's go even further back. We know that vector candles like to be recovered at least 50%. Okay? So here, market maker realized the return on his longs that he built this whole way down. Remember, retail is short in this candle. So he brought it up, he realized the return. If this was going to be a true move down, I would have expected something like this: a drop, recovery of the vector, and then a continued move down. Now, what does retail call this? Retail calls this the breakdown or breakout, the retest, and the continuation. But why? Why is that a thing? Everything you guys think you know, why? Why do triangles work? Which I don't think they do, but why do you draw this, right? The why is what we're trying to learn. So if I believed that we were going to break down in this point, what I would have expected to see was a nice drop, a sharp recovery, and potentially green vector candles on the way up, because that means that market maker is shorting on the way up. So if there's green vectors on the way up, market maker shorting, I would have expected it to drop down and break the range, but it didn't do that. Let's come back to this wick. After this manipulative move by the market maker, we can see consolidation. Now, what happens in consolidation usually? Well, people are anticipating some kind of movement. Now, keep in mind, we're on the hourly time frame, so these are not as small moves as you think. I mean, 1%, it's not a huge move, but it's not like it's, a 1/4% or whatever. So what's happening in consolidation? Well, nothing really is happening. So, but what do you see as a trader? As the retail, we're on the 1 hour time frame. You can see some potentially, if you don't use the EMAs and stuff, you can see some cheat sheet entries here. Well, why didn't it work out? We're consolidating. But market makers know that we use indicators like this, and they know that we see this green dot, and they know that we're longing, right? Then what happens? Price starts to come up slowly. People are like, oh, I was right. Let me continue adding to my long. Let me long, let me long, let me long. And then they just get flushed out, and it hits their liquidation. And most people probably would have put their, stop loss right here. Some probably would have put it here. Some might have even put it here. Well, this wick completely flushed out all of that. Second number for the VIP Discord is a 0. So what happens is when price is consolidating, aka doing nothing, and we're going to talk about why consolidations happens in just a second, but typically what market maker will do is stop hunt the low, stop hunt the high. And that's exactly what this wick was. He happened to stop loss the low first, but this wick stopped out the highs. And if you've seen one of my last videos recently, we talked about swing failure patterns, our SFPs. This is why SFPs happen. Okay. Now, very quickly before I talk about why consolidation even happens, let's talk about this wick, exactly this wick, and the psychology behind it. You could get lucky and you could put your stop loss there and you would have been lucky. Great, cool. But why did I know that that was the low? Or not know, but why did I have a very high probability into believing that that was the low? Well, remember, a red vector candle is retail shorting and market maker longing. So at the time of this 1 hour vector candle, it wasn't always a wick. Remember, we're looking in hindsight, but this was not always a wick. At one point, this candle was like fully red. Okay? Which means that this whole way down, retail is shorting, market maker is longing. If after a couple hours and we're here in the price, if market maker brings price back down to this point, He is releasing, this is very important, guys. He is releasing the liquidity of all of these traders. And when I say releasing, I mean anybody that's shorted here and has not gotten liquidated will be back at their entry. So let's just say your average entry short, your average entry, let's say is there, which isn't uncommon. I know it's very, I'm sure of this. I haven't asked, but I'm sure that you guys have exactly shorted the bottom or longed the exact top, like almost to the dollar. Why? Why does that happen? That's psychology. I'm sure we've all been in positions where we were long. You long during this green vector candle. You get absolutely rinsed on this ride down. And then you're like, screw it. Price is going down. We're breaking down. This was a fake out. I'm shorting. And then it reverses exactly when you decide to short. So let's just say that was you. And now you're stuck. Now price is here. Somewhere around here, whatever. And you're stuck. You're short. You don't know what's going to happen. And you're stuck. Market cipher B is not really helpful. Let's be real. Market cipher B, similar to other indicators, are very good in hindsight, but it's not very easy to see in real time. So market cipher B is of absolute no use, at least on the 1 hour time frame, right? If your average entry is here and you're up here, you don't really know what to do now. And if market maker decides to come back down, then now when we come here or here, like somewhere around your level, now you might have the mentality of, okay, I'm just going to take the small loss, or I'm back at break even, let me get out. Let's just say you're down 50%, right? Doesn't matter however much you're leveraged. Oops, sorry. However much you're leveraged, let's say you're 50x. Sure, let's say you're 50x. So now you're down 50% after this 1% move right up. Okay? Oh man, I don't want to close it. I'm down 50%. What if it comes back down? Whatever. Right? And this comes down to discipline, but I mean, this is kind of how it is. Well, if market maker moves price down, now you might be only down 25%, and you might say, okay, I don't really know what's going to go on. Instead of me being down whatever your position size is, I'm down half of a position size, or whatever the case, right? I don't know your numbers. Everyone's different. That's fine. And market maker is not in the business of giving you second chances or letting you out, right? He trapped you for the reason of liquidating you. If you're not gonna close your position at 50%, it's gonna auto close at 80%, and that's his goal, right? Market maker's designed to wreck you. So this is why I knew that we're not gonna come back down here, because why would market maker come back and release all of the liquidity in there? Why would he release it? But Geo, wicks are like vector candles, right? And vector candles like to be recovered. Absolutely they do. Do I think that we're never going to, I think we're eventually going to come back to this wick. There's liquidity here. Remember, the higher the time frame, the longer it takes to come back. But in this exact instance, understanding why the move happened, you can be confident even if you came late to the party. It doesn't matter if you longed here even. You're in profit right now. If you understand why this happens, why is it unlikely to come back down here? Because traders are trapped short. And if traders are trapped short, market maker is not in, there's no charity here. Market maker is not in the business of giving you a second chance and letting you get out. Alternatively, what does the market maker do? Let's look. Now, if this was a vector candle, it would be more so what I'm about to say. But let's say price comes back up and you're down at this point. Let's say you're down 50%. Price starts to dump, and you're like, "Damn it! I was right about my analysis. We actually are going down. Let me add to my shorts." This is what happens when you're down 50%. They want you to add to your margin. They want you to double your position size and get your average, in this case, higher, right? If your average is here and then you enter more here, now your average is here. That's what they want you to do. Only for what? Only for them to shift it out, hit another wick, and reverse it again. This is the business model. This is what they try to do. If you haven't been in this situation, you may not understand it. I have. I've been in a position where I've been absolutely destroyed by the market maker. Before I knew any of this, before I learned how to trade and learned how to do it properly, etc. Before all of this, I know what it's like to be down 80% on a position, be down thousands of dollars, and be like, man, ugh, I should have done this, shoulda, coulda, woulda. It doesn't matter. This is how I knew. Why would the market maker come back down? And you know what? Sometimes the hill SFP and SFP, but because we had this much consolidation, there's no reason for market maker to come back down here. The job is done. He brought it down. He flushed out all the liquidity in this area, shifted it out, trapped the traders. There's absolutely zero reason for market maker to come back here. Somebody asked me about Phantom earlier today. I don't know what Phantom's even doing right now. I don't really trade Phantom. But I said there's no reason. Okay, Phantom is still chilling. But I said, as far as I can see right now, there's no reason for Phantom to come back down and collect this liquidity. I see no reason for it because we had some wicks. We're in consolidation. And yes, we do have this vector candle. But based on market cipher B, based on my vectors and I mean, let's look at this. Like, look at this huge wick down. If market maker decides to bring price down, all the people that are short from this vector, if they still are not liquidated this far out, like they're underwater. I see no reason for them to come and bring it back down to this point as of right now. Things are always subject to change, but I see no reason for it. This is how you can use psychology as confluence with your trading. And this is a very, 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 very important thing. People don't think like this. People think how they think. Remember, this is not your game. This is the market maker's game. It's like if you show up to play basketball, the market maker will put the net up and give you the ball and let you play. But if there's no ball and there's no net, you can't play. The market maker's job is to make you play. So the game is not about you. It's not about your emotions. You need to think, how does the market maker think? And now I'm going to talk about consolidation, okay? The internet, YouTube, everybody says consolidation is because price is overbought, it's oversold. It's so that institutions have a chance to buy the asset. They have time to accumulate. It's all bullshit. Listen, especially for the new ones, because the OGs know that I've been like preaching this. Everything you think you know about trading is wrong. Everything. Stop learning from retail. If 95% of retail loses, why would you learn from the losers? If I want to join the NBA, why would I learn from a 6-year-old boy in elementary school on his team instead of learning from LeBron? You don't do that, okay? So let's talk about consolidation now. Remember what I said, how the market maker holds the ball and puts the net up. Remember what I said about that? Let's open this thing. What I say about the market maker holding the ball and keeping the net up. It is his job to pique interest in the market at all times. Do you think that the market maker, if he chooses to do so, cannot literally do this? He can literally do this if he wants with the price. Up, down, up, down, up, down. Excessive amounts, stupid amounts. You know how I know that? Because we've seen this candle, which looks like, right, it's a 1 hour candle, but we've seen a candle of this magnitude. In other words, 5%, we'll call it. We've seen this in a 1 minute or a 5-minute candle. We've seen this. So don't at all ever think that market maker cannot flush you out in 1 minute if he chooses to. No, man, price can't come down here. Yes, it can. It absolutely can. Okay? It's important to know that. Now, why does he not do that? Why does the market maker not do that? Well, keep in mind, the market maker's job, it's literally in the title, guys. The market maker's job is to make the market. Okay? Without the ball, without the net, there's no game. The market maker's job is to get you to commit your liquidity at all times. And now we're gonna tie this in with CVD. If you don't know what CVD is, I have a video on that. I'll link that down below as well for the YouTube people. I'm not talking about CVD and the price right now. I'm talking about open interest. Third number for the VIP Discord is a 7. Look at open interest, right? Open interest, for those who don't know, is just positions in the market, whether the positions are whether new positions are coming in or people are closing their positions. In short, that's what open interest is. So at any given time, the market maker's job is to have open interest increase over time. This is what the market maker is trying to do at all times. Remember, if nobody shows up to the court, then there's no game. The market maker provides the ball and the net. Oh, man, we are pumping, baby. Let's go. Okay, market maker is providing the ball in the net, but if no one shows up to play, then there's no game. Market maker's trying to have interest increase over time. That is what consolidation is. It is not to give institutions a chance to buy. That's the stupidest shit I've ever heard. It doesn't make any sense, but that's what they teach you guys. But they also lose 95% of the time. What they do is they wick price up and down. Look at this zone. I mean, this was like very, very low volume. Let's come down to like, I mean, here, we'll use this. We'll use like this larger zone. I'll include it in, right? Let's say this is our zone, right? It's just consolidation. For the scalpers, we can exploit these moves on lower term time frames, and I will do a video on how to scalp. But for your day traders or your holders, position traders, whatever, what do? Look what they're doing. At the end of the day, price went up, price went down, and it did nothing, right? Did absolutely nothing. Well, when price wicks up and then reverses down, market makers trapping traders. I'm going to remove this box so we can see it clearly, but you guys you can all see the zone, I hope. When price shoots up and retail starts to long, and then he brings it back, well, retail is trapped, right? Retail's trapped. And then he hits the lows, people are shorting, retail is trapped. Now, just on this basis alone and just on psychology alone, I can see that if market maker comes back up to this point, he's releasing the liquidity. And look, he almost did. Look at this wick. But he did not allow the people that were here to get out. And this is more so the case. Look how big and how red this vector is, the same one that we talked about earlier. If market maker brings price down, he's going to release the liquidity. But his goal is to keep you interested. And how does he do that? He makes you think that you know how to play the game. So he sets up the price to draw all these triangles and whatever. And oh, I'm so smart. I know how to draw a triangle and it's breaking out and we're good, whatever. And then what happens? He flushes price down. You know what they say? It doesn't make any sense. First of all, when they do this and they get the target of it and they do this, this is the stupidest thing I've ever heard. Because yes, it's very possible that the price will come up here and hit this quote unquote target. But what did I say? What was the very first thing that I said in this stream? The market is moved by money. If there's no money here, there's no reason for market maker to move the price here. So this is the dumbest thing I've ever heard, number one. Number two, you think that he doesn't know that you're drawing these triangles and whatever? Look, oh, we're breaking out, we're good. Boom. And look at this concept that they teach you. They teach you this. Breakout, retest. We hit the retest continuation. Where's the continuation? You just got flushed out. Sorry if I'm going too fast. Let me do it again. Breakout, retest, hit this wick. When you come up, people say wait for the close. I don't wait for candle close. That's weird. Sorry, it's just weird. Why would you wait for the close when you could like not? Anyway, continuation, price does nothing for like a day or however long and then rips to the downside. So get this out of your head. This is why I preach. I never went into detail. Man, we are pumping. This is why I preach the how geometry shapes are so stupid and like, you know, all that. We follow the money here. You want to lose? Let other people lose. Here we follow the money. I don't want to see triangles and whatever. You can use it as extra confluence, but we follow the money because the money is what moves the markets, not these triangles. Okay? As we go on, you're going to start to now understand how the market maker thinks. Stop thinking about yourself. The game it's not your game. Let the market maker do what the market maker is going to do and understand why the moves are. And guys, for those who don't know, especially the ones on YouTube, I'm very engaging on my Discord. So please come join the Discord. The link is in the description down below. I'm in there all day. We're talking all day and I give these setups. And after I do a lesson like this, I start to show you guys, look, this is a good example of it. Okay? You need to understand the psychology behind the market maker. You need to understand that the market maker's job is to increase open interest. He needs to get you to commit your liquidity. If nothing is happening in a zone, he will wick up, he will wick down, because here clearly nobody's buying or selling, right? So he'll wick up, he'll wick down, he'll get people committed, and then do the true move. And this is why seeing vector candles is like, and I say this all the time as well, is like having goggles that can see through clothes. It's a hack. You just need to know which way to look. All right? So this is what your consolidation is. It's all it is market makers trying to do this. So if you're ever in doubt, come to CVD or come to coinalyze.net. It's a free tool. Sign up completely free. Make sure you have your CVD on, your open interest on. I have a whole video on it. And look for this. When nothing is happening on CVD, nothing is happening with the price, okay? After open interest is increasing like this, then it will decrease based on like positions and stuff after the move is already being made. But this is what you're looking for. This is the market maker's only job, is to make the market move. The only reason market maker does not wick it up and wick it down is because nobody will play if you did that, right? If it was so irrational and just did this all day, nobody would play the game. So he needs to make you believe that you can play and you can win. All right. Does anybody have any questions? I need a drink of water. You guys can unmute, ask away. Wow, no questions. Okay. Wait, I might have one in the DMs here. No. Okay, so if you guys don't have questions, maybe in the... Yeah, if you guys don't have questions, does anyone have any comments? Are you understanding it? Talk to me. Let's get this chat engaged. Are you guys understanding what I'm saying when I'm talking about market psychology?
I've seen a 16% 1 minute candle while Crypto Face was live streaming one day. That shit is very real.
Yeah, man. Yeah, we saw it's not uncommon. It's not uncommon. And it's all relative, man. We saw, I think in 2021, we saw a red $10,000 1 hour Bitcoin candle. And you best believe that recovered real quick because that's where the money is. But yeah, man, it's very real. The only reason he doesn't do that is to keep you thinking that you know how to play the game. And that's why that's why the triangles and the pennants and the bull flags and whatever else, it doesn't work. And that's why sometimes market cipher B might look a certain way and it doesn't go that way and people don't really understand it. And that's why people... I don't remember who it was, and I'm sorry, I apologize, but somebody was talking about there were bear divs yesterday, and we still continued to pump, and I ignored the bear divs, but how did I know to ignore the bear divs? It all comes down to psychology. So this is something that you guys are going to be able to see in real time, and I want you to start thinking about how the market maker is thinking. Remember, it's not about you. This is not your game. Okay, you're not LeBron here. But if we can learn how the market maker thinks and get into the market maker's head, then we can trade along with the market maker. So put the bull flags down, put the bear pennants down, put all that shit down. Learn the game. I say this all the time as well. Don't focus on the money. Learn the game. If you want to make money being in the NBA, you got to learn how to play basketball. You're not going to just make money. Learn the game. Understand the psychology behind the game. Why does price wick like this? When you see this, I don't want you to think, oh, there's a wick. Let me just put my stop loss under the low. Because if that was the case, look right over here. What if you did that here? You would have got destroyed.
I have a question, sorry.
Yes.
It might be a bit dumb, actually.
No dumb questions.
But would it be interesting to look at like the order book distribution? Because would that give you like an indicator of where kind of, let's say, like the resistance zones are in the order book?
Man, I'm going to be completely honest.
Or is that more fluid?
I'm going to be completely honest with you, and I'm not proud to say this, but I don't look at the order book at all. Like literally zero. I have other forms of doing TA. I do know what order blocks are, which perhaps I'll do a video on as well. I try to keep it as simple as possible, and I'm not right for this. So again, I don't say this with pride, but I don't look at the order book literally at all. So if anybody else wants to jump in and perhaps answer that question, I can give my insight on the response, but I'm honestly not familiar with order blocks the way that, or sorry, with the order book the way that I probably should be.
I can try. Um, um, one of the other members is a lot better at reading the order book though. But I don't remember who.
Well, speak up now or forever hold your peace, or
No.
Kakarot, floor is yours.
Well, like Mr. Market Maker or Steve. I mean, what he is he's just the limit orders that are on the order book. That is the market maker. So I mean, you might can learn how to read it by looking at it directly. It's not my trade though, so. All right. So yeah, I have no detailed explanations of how to read it, but I mean that is Mr. Market Maker. That's where his orders are.
Yeah.
And when people market in, what they're doing is they're hitting those limits, and that's what causes the spike in volume and the candles and everything.
Yeah.
But like really, at the end of the day, do you need to know that, or is knowing that you've got a green vector good enough?
Yeah, that's why, I mean, I don't really use it either. And just to piggyback back off of Kakarot, like, you got to also understand, this is what I can say, this is what I do know, is that it is not uncommon for something called spoof orders to be in place. And when I say not uncommon, I actually mean it happens literally all the time. So if you don't know what a spoof order is, it's like, let's just say that there's an order block here of, I don't even know, yeah, this is Bitcoin. Let's just say, I don't know, like there's 2,000 Bitcoin here, like it's a stupid number, whatever. Like they will place this order and then expect price eventually to come down, and people can see it, right? Like I said, it's like deal or no deal. We all know that there's a market maker. We all know that, we just don't know who it is or how it works exactly, right? There's different theories. I disagree a little bit with Kakarot. Like I actually think that there are market makers, but the theory is still the same, right? It's still someone moving the price, right? Whether it's a collection or it's one person or whatever. Man, this pump is, oh, I can't wait to look at my PNL after the stream. Anyway, but they do something called spoof orders, which is they'll place the orders here. They'll know that we can see it, and then they'll remove it. So they like try to trick you out. So again, man, I don't have the best answer for order blocks because I don't really use it. I have already, my Coinalyze, I have this, I got my 2 indicators here, and it's just like, it can be a lot of noise, and there's a lot of spoof orders too. So it's not really like when I see a vector candle, there's a vector candle there. Like there's no taking away this vector candle. So I know that there's liquidity here. But when I see the order book, they can just remove it, and it's not uncommon for them to do. So that's really my primary reason for not really using the order book. But yeah, that's kind of the best answer I got for you. Also, if you didn't know, since we're on the topic, limit orders block price, they hold price, and then market orders move price like in that direction. So if you're gonna long right now, it will, like market long, it will move the price up, but your market long will hit the limit shorts, which block the price. Little quick side note. Any other questions?
No, I liked your explanation. Because there's more than one way to skin a cat.
Yeah.
Like if someone wants to become an expert in reading the order book, that's fine. But like everyone doesn't have to be an expert in that particular way.
Yeah, absolutely, man. There's so many ways to trade, and that's why I have no shame in saying, like I don't use the order books or like whatever. Like I'm very open about it. Even RSIs, for example, something so common. I don't really use RSIs, but there's different ways to do it. So yeah, for sure. Thanks for the feedback. Anybody else? Do you guys understand the concept? Like, if I take you back on the chart right now and I say, tell me what's going on, are you going to be able to tell me something, or are you iffy? Like, give me some feedback. Now's your best chance to engage with me. I mean, I'm always available anyway, but now's the best time for us to talk about it. And I'm sure whatever you're thinking, someone else might have that question too.
Hmm. So if we take all this and we, I'm not very big on predictions. I like to see, something actually happen. But if we take all this together, what does it look like?
Like right now, in terms of market maker,
Yeah,
what are we thinking?
yeah. I mean, as long as we, keep in mind that, you're looking at like, a 60%
Yeah,
chance or something like,
yeah,
which
yeah,
is actually really good in trade.
yeah,
You
yeah.
know, so where do the probabilities lie like right now?
Well,
Hmm.
I mean, it's hard to answer because first of all, obviously everyone trades differently, but it also depends on the time frame that you're on, right? So you're
Right.
not really gonna see, like, you're not really gonna, and I know I'm gonna contradict myself a little bit. I did say that all time frames, like the movement in price works across all time frames. Like, so that's why I say if you want to study market cipher, get on the 1 minute, just because it happens quick, but it's all intra like time. It's like we're in the whatever. It's all intra time. Like, this could be a 1 minute candle just as it's a 4 hour candle. It's all the same in all cycles, right?
Fractal.
So,
Yeah.
but I
The
will
word you're
say,
looking for is fractal.
yeah, cycle, exactly. So the thing that, with the higher term time frames, is that because it takes price so long to move, it's not it's not so easy to see. We'll say it like that, because it's such a longer cycle. It's not super easy to see. But if you're asking like, what do I think in general right now? Like, it depends on the time frame, but I mean, look, I've been vocal about this as well. I've been calling 32K for like 2 months now. I've been saying for a while, and although we do have a lot of vectors that we can come back to, and I absolutely think that we're gonna come back to them. I don't think it's a bull market yet, personally, but you got to think at the overall context. If we're looking at like the 4 hour chart, we got to look at the daily, and if we've been coming down for however long this has been, a year and a half, 2 years. A year, let's just say, for the past year, it's just been nonstop down. I mean, all this is really like, in this drop here, many shorts, right, were opened in these daily candles. And a lot of people don't leverage the way I do, right? I used high leverage because I like my precision entries. And I actually learned that from being so careless with my positions. I used to just long and then not have any targets, not have any stop loss, and then I'd come back like 2 days later and I would be like minus so much. But yeah, I don't know. I would just say, like, there's a lot of people shorting here, and the people that are just so convinced that Bitcoin has to come back down have been shorting this whole way up. So, I mean, I don't know. I think a squeeze is coming, personally. I would not be surprised at all, in the slightest, if price comes up to this point, which is what I've had my eye on for a long time. This is not my chart that I normally use. This is my streaming chart, but here's a really good level that I think that we can wipe this liquidity and recover this vector candle. But yeah, it just depends on the time frame that you're on, right? I do it more on I don't really trade huge ranges like that. I trade shorter ranges, and I have a ranges video. So anyone on YouTube or any of the new people, go check out that video as well. But I like to see these quick moves, because this gives me an idea of what's happening right now. You know, it's very hard for me to tell you where Bitcoin's going to be by the end of the year. Like, I don't know how people are like, oh yeah, Bitcoin's going to be 100K, 50% chance of that. Like, I have no idea where they get that from. I have no clue. I don't make predictions like that either. I make predictions based on ranges, right? Which do I think this range is going to break up or down? That's how I trade. I don't trade 100K Bitcoin by December. I know that was I took a huge tangent there, so I don't even remember the original question. My bad. And last number for the VIP Discord is a 0.
No, I'm still thinking the same thing. I mean, like it. I'm thinking up, but I'm also thinking you'll get chopped if you try to do it during a holiday.
Yeah, I mean, you know what? It's interesting because it was the weekend, and then we also have Canada Day, so we're off today, and then tomorrow you guys have off for the 4th. And also apparently, like, I don't know, you know more than me, like I'm not in the States, but do people work on the Monday now for you because the holiday's on the Tuesday? Like, are people working today?
Yeah, yeah. The market was open a half a day, which is really weird.
Oh, really? It closed early today?
Yeah,
Oh, wow. Yeah, okay. So
yeah. I
yeah,
mean,
yeah, I don't know. I don't know either.
yeah, yeah. Steve just came in to collect party money. I think like it was
You
madness.
know, I have a theory. I have a theory about holidays, and this is not based on anything that I learned from Traders Reality or Jason or whatever. This is just my theory, and it's completely a theory. Like, there's no evidence to suggest otherwise, but I'm just gonna lay it out for you guys. I actually think that during holidays and stuff, um, in my experience, they usually pump, and it's because like tomorrow everyone's gonna get together for the 4th and they're gonna talk about it. And the people that don't know Bitcoin, remember remember the market maker's job is this. Simple as that. Increase open interest over time. If the open interest is low or whatever, how are you going to peak interest? You're going to pump it right before or on a holiday so that Buddy Joe, whoever may not know too much about Bitcoin but knows what it is, has a friend like me that knows what it is. And I'm like, oh man, Bitcoin's pumping. We're going to 100K. I learned from retail. I drew my triangle perfectly and it's breaking out. So it's going to go exactly here. And then what do? They get all those traders invested or interested in Bitcoin. They get the open interest up. Maybe those people open their first positions and then they roll it over. That's, in my experience, what I find to be true. Again, no evidence to suggest it or back it up. But if I was a market maker, which is how we're trying to learn how to think, that's what I would do. I would peak interest right before holidays, right before Christmas time, right before Thanksgiving, right before all that. Get everybody invested, either up or down, doesn't matter, and then wreck it, and then just rip it the other way. That's what I would do. But for this case, man, I think up, bro. I think up, and I don't even think it's going to be a small up. I think we're going to cleanly break 32, and I think we can get sucked up to like 36 real quick. Because these people, remember, what did I say during the stream? When price comes back to their entry or to their liquidation, right? Let's say this is this line here, 32.4. is their stop loss for everybody that's been short this whole way, right? This is their stop loss. Now we're so close to the stop loss. People are going to just add to the margin. They're like, you know what? I'm already so close. I would rather lose $100 with the chance of making it back than lose 50. At least I'm like that in the casino. If I show up with $1,000 and I lose, I don't know, whatever, $800, I would rather lose the full 1,000 but had the chance to get my 800 back. That's how it happens. And look what happens here. We're on the 4 hour. Price came up to that same zone. It came close to their liquidation. They held their breath. Then price starts to dump. They're like, okay, thank God, I'm good. And what do? After the price starts to dump, they start adding to their margin, saying, okay, I'm right, it's going to go back down. That's how it is, man. That's how they think. And our job is to exploit how the market maker thinks, because it's not about you. It's not your game. All right. Anybody else? 3, 4, 5, 6. All right, guys. Well, if there's nothing else, no other comments, no other questions, then I think this is a good time to end it. It's been about 50 minutes. But as I mentioned, I will now that we've talked about it, do what I do with all my lessons, where now I will start to update you guys based on what I think in terms of market psychology. Now, it doesn't end here. If you guys have questions later, please reach out. If you're on YouTube again, I'm sorry to keep chilling it, but we really have a good environment here. We got over 300 people now in the Discord, so make sure you come say hi. I have no problem jumping on stream and helping you guys out. It doesn't need to be super official all the time, so just please come and engage. But I want you guys to start thinking like market makers. I want you to, when you say in the chat, oh, price is gonna dump, and I question you, I want you to give me a legitimate answer. I want you to tell me the psychology behind it. I don't want to hear, oh man, there's a red dot. So no. Why is there a red dot? What's going to stop the red dot from printing a green dot right after? Think about the psychology. It's a big thing. All right, guys, we're going to end it here. For the YouTube people, if you made it to the very end, I very much appreciate you. We hit 500 subs, and I'm only like 400 hours now away from being monetized. So if you made it to the very end, I very, very, very much appreciate it. If you like the content, please like and subscribe. My name is Gio. I've been trading for a couple years, and I believe in providing value up front. I don't like to charge my knowledge, especially because what happens is people don't know how to trade. They get wrecked, and then they look up how to trade after they get wrecked. And it's like, well, you just lost all your money. Why would I charge you on top of that? I don't think that's cool. Yeah, so make sure you join the Discord. If you like the content, please like, please subscribe. Thanks for watching till the end. Share it to your friends. Happy 4th to my US people. I hate Canada, but happy Canada Day. I'm from Canada, by the way. I'm from Toronto. But yeah, and then for the VIP, we are going to change the structure of it in the next couple weeks. I don't know how yet, but it's going to change. But for now, it will still be the same throughout this video. I'm speaking directly to the Discord people. But for this video, I will go back in post and I will throw the numbers in. I'm sorry to do that, but I need the watch time and I'm almost monetized. So for the 30 people that are here live with you guys, or with me, with you guys, I really appreciate it. Thanks for coming out. Thanks for the session. And I will see you guys in the Discord. And I want to hear you guys talking about market psychology. I want to know why the price is moving the way it's moving, not that it is, because it's getting lucky is easy. Keep making money's easy. Keeping money's hard. Let's keep the money, right? Tesla, yacht, or bust. YouTube, peace out. Discord, peace out. Thank you guys. Appreciate all y'all. Happy trading.